My name is Adam Nanji. I'm the Senior Vice President for Digital Banking for a company called Zafin. We're an enterprise banking software company that has 26 global banks on our platform. We were a startup 12 years ago. Now we're a 500-person organization. We're a software company at the end of the day. I've seen a few of the panelists here from back in the day in FinTech. I actually was one of the founding members of the FinTech movement in Canada. So I ran a group called the Mars Innovation Hub FinTech Group. This was before the word FinTech was actually a name that's used and coined pretty often. This is before robo-advisors was a name. This was before lending was even a digital thing. So it's nice to see Scarlett. Sonny was on a panel with me in Geneva last year at Cybos, although he Skyped in, I believe. But everything the panelists said, very much true. And I'll give you a couple stories about what's happening in FinTech. I'm going to tell you a little bit about the reality of FinTech, maybe a little controversial to what some of the panelists will say. So Zafin is an enterprise banking company. How does a bank actually work with a startup? Can somebody here in the room tell me how a 1960s IBM mainframe integrates with an AWS cloud? Exactly. It doesn't happen. And so it's not that the banks don't want to work with the FinTech companies. Yes, it is challenging to go meet the head of retail or head of commercial at Bank of America, probably next to impossible if you're coming off the street. But the technology reality is that we've got this rapid fire AWS, Azure clouds, XYZ, and banks are running IBM mainframes, profiles, systematics, all of these old school systems that make billions of dollars a quarter. Don't get me wrong, billions. But they're super old. They're not open APIs. They're very hard to map. And so the company that I work for, Zafin, we've actually spent 12 years mapping into a bank's transaction processing systems. In any retail bank or corporate bank, your checking account does not talk to credit cards. Credit cards does not talk to mortgages. Mortgages does not talk to deposits. That's because at a bank, every one of those TPSs is individually siloed on a different technology stack. So when wealth management comes in and says, I've got this new wealth management company, to actually integrate to a wealth management transaction processing system at a tier 5 or a tier 1 bank is pretty difficult. It's pretty difficult. And so our company has actually gone out and connected the different TPSs at a bank. The other thing is that's a big problem. Banks are very disconnected. It's a very big technology challenge. The other challenge banks face, there's a tremendous amount of pressure against FinTechs are threats, FinTechs are partners, what are we doing on digital? Has anybody here applied for an actual loan on their mobile phone? And full out, from beginning to end. It's still pretty rare in the market though, right? Not every bank, you can't just go on your B of A or your SunTrust Bank and say, I would like to get a loan. In Canada, one of the apps that we have, one of the banks, you actually have to apply for the loan and then you still at the end of it, you have to press a call now and talk to a financial advisor. So what's the point of being a digital bank? That's completely counterintuitive, right? The reality is it's very hard to originate a loan from a digital channel. But then you have Lending Club and Borrowwell and Lendit and Lendful and all of these lending companies. At the end of the day, that's a digital channel to a pool of capital to lend out. I kind of cringe now after the past 3 or 4 years, digital lending, robo-advisory. Yes, there's a lot of things going on. But the reality is money and your relationship with your bank is kind of like getting gas for your car. Until the electric car movement really gets mass production, everybody needs gas. Everybody here who commuted, you need a Metro Pass. Everybody here eats food, right? You need groceries. Everybody here spends money. I don't think there's anybody in this room that doesn't have a credit card. We store our money, we bank our money, we spend our money. The relationship I have with my bank is the one that I'll have probably for the rest of my life. And the only reason for that is because my dad took me to that bank when I was 13 years old and said, here's your account. And the only reason for that is because when he came into this country, that's the first account he had. So it's the same bank, generation after generation. Yes, there's lots of digital banks and there's lots of new opportunities to bank with, up and coming institutions. But the reality is, when you're with an actual financial institution, depending on which demographic you fit into, that is your relationship almost for the rest of your life. You will have a relationship with a financial institution for the rest of your life. So FinTech is really interesting. The last 3 or 4 years, there's been a tremendous amount of buzz. I'm really glad to see that New York FinTech Week is happening. But where is actually FinTech going? This keynote is around the future of FinTech. Has anybody here heard of a company called Element AI? A couple of people? It's an AI company based out of Montreal in Canada. They raised about a month ago $137 million initial raise. They are an AI consulting firm. No platform, no product. 137 million, not even a seed round. That was their first capital raise. 137 million. There was 2 articles this morning on FinExtra, if you guys check on your phones. TD Ameritrade just launched an AI, I wouldn't say chatbot, but more of an AI platform around their trading platform, integrated. Bank of America launched on their corporate banking side an AI platform that can help corporations predict their accounts payable. These are all inputs for automation, right? AIs are algorithms that still need inputs. I think the future of FinTech should be my bank should already predict and know that I'm saving money for the kid that I'm going to have, and it should automatically take my funds and put it into this registered education savings plan that's going to optimize my potential gain, right? Why does my bank not tell me that I already have 2 mortgages? I should just have a line of credit already there because I'm going to buy a 3rd property. Or my bank knows that I send 10 P2P transactions a month, so why don't they give me the account that has unlimited P2P transactions when I still pay $1.50 per transaction? So I'm actually paying more I'm actually using the unlimited account, but I'm paying more for it. This is the predictive analysis where banks need to get to. But again, the reality is there's a huge technology gap between where banks are today and where startups are tomorrow. I really like what I heard with the panel around New York. It is the financial capital of the world. I'm from Toronto. Our company is based in Toronto. We actually have offices at the WeWork spot at 85 Broad, which is a former Goldman Sachs building. We are based in Canada, but a lot of our business is here. We have SunTrust, Bank of the West, Bank of America, HSBC, Barclays. These are all of our long-term clients for many, many years. We started in Europe. We have banks in India, in the Middle East. We have 4 of the 5 Canadian banks as our partners. And I'm actually responsible for the entire U.S. market that we have never really beachheaded into until now. And we're coming here. We're putting offices in New York. We're not relocating because we're only 45 minutes across the pond. But the reality is there's 150 banks concentrated on 3 streets. The actual reality is across the U.S., there's 7,000. There's numbers between 7 and 10,000 in terms of financial institutions, super regional banks, regional banks. So New York is not necessarily the be-all, end-all. Toronto's got a huge financial FinTech hub. We've actually got members of the Ontario government that are here that are promoting the fact that Toronto and New York are very similar. There's a lot of cross-pollination. I am one of 50 companies, Canadian FinTech companies, that will have presence and office here in New York that's doing business in New York. It's bloody hard. No one said that on the panel. It's bloody hard to do business in New York. You got to be far scrappier than you do in Toronto. You got to be far scrappier than you got to be in, I'll say, London and Singapore and Geneva and Holland and every other city that wants to be a FinTech city. But the reality is you can't just put up your hand as a city and say, hey, I'm Chicago, I'm a FinTech hub. I think you need 3 things to be a FinTech hub. You need a concentration of entrepreneurs, not just quantity, but quality. You need participation from the financial institutions. You need participation from the financial institutions. And you need movements like this. Mars in Toronto, which I know people are here from here. New York, the FinTech sort of movement. You need that backing of that innovation hubs, the ones that can actually connect the banks to the startups. And that means that there's government, support there. There's municipal support. There's state support. You need those 3 things to actually be a FinTech hub. You can't just say, I'm Sao Paulo, I'm a FinTech hub, and have 20 entrepreneurs, 20 startups. Not a FinTech hub. Not to say that Sao Paulo isn't, but that's what's happening. A lot of cities are saying we're a FinTech hub. I look at Toronto, New York, Singapore, London, Hong Kong, of course. Those are the sort of founding hubs, and then a lot of other cities will percolate. Let me tell you a quick story. I met a guy in Toronto 3 years ago. His name is Mike. We sat at a coffee shop, And he said, Adam, I keep hearing about this FinTech stuff. And he's a consultant. He's got a very strong investing background. He said, I just want to solve a problem. I got a problem. I said, what's your problem? He said, and he's 28 years old, by the way. He said, I can invest my own money and make higher returns than my bank. Why am I paying 5% when I can look up any prospectus on any fund on Google Finance in 5 seconds from my phone? And actually, my portfolio that I've been self-managing since I was 18 has done far better than the market has bared over the past 10 years. So why do I have to go to these financial institutions and pay them to store my money and to invest my money? Doesn't make any sense. Simple problem. Interesting concept. What are you going to do about it? He says, I'd love to build an online digital platform that helps people between 18, actually, frankly, anybody, learn how ETFs work, learn how the bond market works, learn how derivative works. I'll challenge anybody to say you could learn how to do a lot of things on the internet. You don't necessarily have to take a course in financial planning to learn how to trade. No one's saying to go and do big trades, but you can learn what a derivative is. You can learn what an ETF is. So 3 years later, this guy, Mike, his name is Mike Katchen, he's the co-founder of a company called Wealthsimple. Wealthsimple is Canada's largest robo-advisor. They raised $100 million 2 months ago. Series A round of financing. $100 million. They are live in the UK. They just announced their US launch. They're live in Canada. In 3 years, they've amassed $1 billion under AUM, assets under management. And their tagline, throw in $5,000, no fees, and we'll teach you how to invest. They hooked them in. And yes, direct-to-consumer is a bit of a race to the bottom. Companies throwing out apps and trying to compete. But these guys did it. And it solved a very easy problem. I'll give you another story. I met another entrepreneur named Joe. Joe started this company called Paycase, and his family had a Filipino nanny up in Toronto, north end of Toronto. And he said, Adam, my nanny every 2 weeks for the last 10 years goes to the this Western Union corner in downtown Toronto with a stack of cash and 5 documents and sits with this distribution agent to send money to her family at home in the Philippines, not even Western Union. And he said, Adam, she's paying 18 points on the dollar. And she doesn't even really know who's picking that up in Manila, She doesn't even really know. So what are you going to do about it? He says, what if we were able to build a platform on top of blockchain that hedged FX, that could transfer money from a mobile phone to another mobile phone, specifically for nannies and caregivers, I should say, of whatever ethnicity and background or whatever they come from, wherever part of the world they're sending it. What if we just targeted that market? Okay? Company's called Paycase. All they do is they take funds from Canadian bank accounts, put it through their blockchain-like system, but it's actually more on the Bitcoin side. They buy Bitcoin, they trade it on the open market, they mitigate the FX because they can predict where the fluctuation goes, and the money goes out on the other side. 4% it costs a nanny. 4%. It's a simple problem. And so as you guys go through the whole FinTech movement and you hear lots about, lending and the evolution of payments, which is absolutely correct, and Bitcoin and blockchain and AI, my opinion, FinTech is solving real-world simple problems. It's not actually that complex. Banking and banks are very complex. But to give you another example, how does a bank go to the market and say, I would like to give you an unlimited checking account and a high, a Chase Sapphire Black card and a discounted rate on your mortgage if you apply from your phone? They can't actually do that. A bank cannot actually give you a multi-product offering because each individual system is not talking to each other. And so again, simple problem. Get them talking to each other. Show a bank how profitable is Adam to me. All they have to do is see how much I spend on my credit card, how much they pay me in deposit interest, how much I have outstanding with my loans, and they can actually calculate how much revenue is Adam worth. They can actually do it. That's what Zafin does. And so I'll leave you with two things in the interest of time. Number one, I liked what Sunny said. Enterprise is a huge market. There's scale. We have 26 banks as a part of our platform today. Our target is the US market. Even if we get a tenth of the 8,000 banks on our platform, we're going to build a $100 million business. That's not too difficult for a 12-year-old company that's raised some significant capital. But on the consumer side, with the exception of the Venmos and a few others, it's absolutely a race to the bottom. If you simply think you can pull out an app that says I can transfer money or I can give you a free credit score or whatever it is, one, it's going to take you a lot of money to do that. Two, you're competing against 30 other companies. Go to the App Store. I actually have been saying this for many years. It's a race to the bottom. It's a race to the bottom. So what's my opinion and my future vision on FinTech? This is what I would love to see in 5 years. Frankly speaking, I'd love to see it next year, but probably not going to happen. I want to buy a house. When I purchase that house, what I would love to see is the title deed to that house, the asset class of that house, and the keys, not physical, let's call it digital, because I have Bluetooth locks on my house. If I buy a house or if I purchase an asset class that has multiple attributes, that should be my lawyer sending me a side chain on my phone saying, here's your title deed attached to, here's how much you paid, here's your outstanding mortgage that you got to pay every month, here's the code that you got to put in to your lock. You've bought a house. I don't have to go to the bank to get a draft, which is paper, and pay them to give me my own money on paper, and walk it to another bank as a deposit or to my lawyer, sign 1,000 pieces of paper that I never see and I don't know where they are, give it to me on Google Drive, and get a pair of physical keys. Technology today, all of that actually can be done on a that's the power of a blockchain, right? All of a blockchain is it's nodes that have attributes that can be asset classes, that can be title deeds, that can be a monetary value. And so I will tell you that when you start seeing those kind of platform solutions that link up lending and payments and the physical distribution of assets, that to me is the future of FinTech. Thank you very much.